Hello and welcome. We are continuing our coverage into the new things in the industry. At our IDC Financial Insights research meetings, we are constantly talking about how exactly are 2021 trends shaping the investment patterns of the best financial services institutions in our region. Today, we are going to talk about this broad area of risk management, but we are also going to focus in specific at the new challenges of fraud management for the financial services institutions that we track. Fraud management continues to see double-digit growth in 2021, just in terms of IT investments alone. We are going to talk about why these investment patterns are showing up as the big trends for 2021. We continue to track the performance of the best financial services institutions in our part of the world. One of the banks that we continue to track would be that of Mox Bank in Hong Kong. And Mox Bank has a very interesting story of growth, but also a great response and a great feedback on their applications and the mobile app that they were able to launch in the market. So a very interesting story. No better person to speak to us today in these two areas, the fraud management and risk management issues, but also Mox Bank, than the former chief risk officer of Mox Bank in Hong Kong. And we say former with a lot of qualification because Sanjay Nandrajog has just been a few weeks, not even a month since he left the organization, Mox Bank in Hong Kong, but he will talk to us about the industry trends that he is looking at, especially as we shape our investment patterns around that of fraud management. Sanjay, welcome to this conversation.
Hey, thank you, Michael.
How was the Mox Bank experience for you?
They're very exciting, let's just say, very simply stated. It is one of the best jobs I've ever done.
One of the things that we are looking at would be the unique challenges of this challenger banks, the digital banks, this purely virtual banks, depending on how you want to classify them or how you call them. But I would assume that their challenges, especially around that of fraud management, would be different from your traditional big incumbent type of institution.
Absolutely, Michael. I think even before we get into the challenger banks or the neobanks, which actually fraud risk management becomes slightly easier to deal with, it's the full service banks where they've got a multi-channel capability, whether it's the call centers, the branches, the ATMs, if you've got the mobile and the internet banking spaces. Just the fact that they're multi-channel makes that landscape even more complex. Whereas for the digital banks, because they're app-based only and may have an internet, a web-based offering, it becomes slightly easier for them to mitigate the fraud risk. While it is very profound, it's still much easier to mitigate in that space than in the physical world or in a multi-channel environment. And the reason why I say this is because in this world today, you do need to have much stronger forms of customer authentication, right? And identity validation. So for a digital bank, definitely when a new customer is onboarding, the big question is, how are you going to validate the identity? So depending on which market you talk about, there are very robust ways and then some not so robust ways of managing identity. But that's one area which banks need to focus on very clearly, because you don't want to let fraud accounts get opened or customers apply for credit products using fake identities. But I think that's not the only place where the risk emerges. It's at every step during the user journey, which is when they're transacting, when they're paying, when they're using their credit cards. It's at that stage where customer authentication also becomes very, very important. And mitigating that risk is something which has to be done not only based on what the trends are today, but also like how the fraudsters are emerging their own capabilities in 2021 and beyond. So you've got to keep up with the trends, with how the fraudsters are going to be exploring their way of doing business.
Yeah, and let's talk about these new trends that you are tracking. And I think you speak from a lot of experience here because you were also the head of risk operations at Standard Chartered Bank in Singapore, the parent of Mox Bank, obviously. But you have been tracking all these new types of risks that are emerging. What are they in your perspective for 2021?
So I think very clearly we are going to see a lot more with the fact that there are data breaches happening. So there are going to be account takeover attempts. That's very clear. Synthetic IDs is another one. The whole thing on uh, deep fakes, where people are using videos today to do some form of KYC, the introduction of deep fakes, the fact that there are 2D, 3D printed masks which are coming through. So things are evolving and people are becoming very creative in this space. So I do see a lot of innovation come through from the fraud and the syndicates itself. But that's a thing which is beginning to emerge. It's not yet hurting banks, but we do see the very simple kind of stuff which has always been there. Phishing, giving away OTPs, the whole thing where the human element of the customers is being misused. The trust that they might have is being misused to then do an account takeover, and that in a digital channel with faster payments, with money moving out very quickly, is going to become quite important. Even if we think about just fraud by itself, it's an area which is kind of going to see a lot more come along the way. But I think if we take it a step further to think about how the overlap between fraud and financial crime, for example, these two risks have typically been dealt in a very siloed fashion within organizations. Now, in a pure digital play, actually these two risks can't be managed differently. Yes, you do need to have transaction monitoring to do the due diligence on your customers, but there is a whole element of mule accounts which is coming through. And it falls somewhere between the intent, which is fraudulent, versus bad actors who are laundering money through the banking system. And I think that's where people really need to start putting their attention and focus and energies on as the world evolves.
So let's talk about all these issues around that of identity and this multi-channel world, also the challenges around that of managing fraud, especially as more and more of our transactions have moved to mobile. And we're also going to talk about this need to really integrate fraud operations together with financial crime operations as well. So we will get to that. But as you look at your role as a chief risk officer or head of risk operations, what really is necessary these days? You've got a lot of the profusion of all these risks. How do you prioritize?
So I think at the heart of it is the trust which our customers put into a bank. And I've said this before and many times over, building trust takes a very long time. Losing it doesn't take any time. And so we've got to hold on to that trust. So whether you're in a bank, any financial services, including healthcare, at the end of the day, there is a certain element of trust which is there. I think the most important thing from a risk management perspective, particularly around the fraud space, is, and even the financial crime, it is no longer going to be about knowing your customer. It's going to be knowing your user, particularly on the digital space, right? And we've got to start pivoting towards who is the user and how do we describe his persona using the data and the artifacts that we get on a pure digital channel with no human intervention. So, and I think the way to mitigate it is go back to 101 principles. You have to really understand if it is stronger authentication, which I require when somebody is interacting with us on the digital channels, then there are really three things that I need to know, or a combination of three things that I need to know. One is what you have. The second is what you know, whether a PIN or a password. And then finally is who you are, whether it's your fingerprint, your iris, your face, your voice, that's who you are. And I think it's going to be a combination of these three, which is going to lead to far stronger authentication, which in many ways, the typology is called as multi-factor authentication.
Mm-hmm.
So for me, the way we thought of mitigating the risk in a digital only play was, I know the device, I can bind the device. So that's one, what you have. And the second one is who you are is your biometrics.
Mm.
And I do believe that the industry is going to go faster and closer towards using devices and biometrics as a core ingredient of authenticating customers. And it doesn't need to be only at the digital channels. This can be even in a multi-channel environment. Let's say you walk into a branch, you still have a device and you have the biometrics, which can get authenticated for strong authentication. And actually, from a user perspective, from a client, he knows that he is getting that seamless way of authentication across all channels in an entity, rather than a very disjointed way of how you get authenticated at a call center versus an internet channel, et cetera, et cetera. So I do believe that the industry is going to move closer towards introduction of biometrics as a very strong way to authenticate.
Biometrics, one thing, but also looking at the investments of financial services institutions, user behavior analytics seems to be very strong these days. What do you say of the capabilities of financial services institutions in that space?
I think at least I'll talk about Asia. We haven't seen so much of online fraud as yet in Asia, okay, because you can actually deteriorate the entire customer experience by creating a very friction-oriented journey, and therefore you've got strong authentication. So we've actually gone that route. But as people pivot towards the experience of the customer, which is exactly what the digital players are trying to do, right? Reimagining the client experience. So the fraud will happen unless you put in very strong mitigations. Now, as far as the data is concerned, I don't think the institutions have really started embracing the use of digital footprint in very robust fraud mitigation strategies. Of course, there are players who are already on that path, but in general, I think people are still behind, and they'd much rather deal with it with a two-factor authentication, which is an SMS OTP 100% of the time when you log in and deteriorate the client experience, than actually use the data to create a friction-free journey for customers. So we will pivot towards that. And I think in fraud, it's always that balance between the client experience, how much fraud do you save, and then at what cost are you saving that fraud? So that's the balance which has to come in.
Are we also pivoting towards the use of alternative data? There's this emergence of data as a service, insights as a service type of companies that help financial services institutions decide which one's a fraudulent type of activity or a fraudulent ID compared to usual behavior.
Absolutely. I think a couple of years ago, I was on the advisory board of one of the companies which was focused on digital identities and using your transactional behavior across the internet, across merchants, across the devices, etc. They started to create a digital identity for the user. And that's the kind of information that we started to consume, which gave us a way in which we could create a friction-free environment for our customers and only step up where we thought the risk was higher. So alternative data is going to be very big to deal with fraud. Proximity, for example, at the ATM and the device, the proximity of the device to the ATM is another place which has not yet been explored, but will get explored as people come along and things become easier. But I also believe that there will be a lot of opportunity in how fraud risk data which you use to mitigate fraud or financial crime, is exactly the kind of data which you can start using to make credit decisions for thin file customers. And that's pretty much untapped domains as yet. But how do you make unified decisions for customers rather than put them through a disjointed kind of experience. And I think the banks which are going to, and players which are going to be smart about use of data and alternative data to make those unified decisions are going to be able to create a much differentiated user proposition and client experience than others who don't.
A lot of this data and analytics and decisions will be facilitated through greater use of cloud. So what do you say of this possibility that more and more of these fraud tools and applications will rely heavily on public cloud usage?
So I think use of cloud is a very different thing. At the end of the day, how you manage the fraud mitigation is through your strategy and your operations. Technology is just an enabler to it. But you're very right in the way that you mentioned that data as a service, with the alternative data providers providing you a whole lot of information which was otherwise not available, has use in many, many parts of risk mitigation strategy, not only in fraud, like I said, even in credit, financial crime, or even for that matter in collections. So there's a world of opportunity which is opening up with alternative data. Technology is just an enabler, but it has to be the mindset. It has to be about the forward state thinking, which is actually more important than what you've done out for the last 10 years.
And that's true because you have been able to use technology in Standard Chartered, for example, but I think much of your success would come from this automation, simplification of work streams, but also hubbing. Can you talk to us about how exactly technology needs to be supported by these other non-technology related activities?
So I think let's talk about hubbing, especially for very large entities which have got multi-geography footprints. Or for that matter, even within a geography, if you could think of a consortium of multiple players coming together, the whole idea is the more data you have, the smarter you are. And the more learnings you have from multiple parts of the world, because fraudsters hit in a particular part of the world and then replicate it across others. Hubbing gives you that advantage of scale. It gives you the advantage of learning lessons from, let's say, Asia into Africa. So before the fraud actually comes into Africa, you already experienced it in another part of the world, and then you used it to then build your defenses and therefore not get hit out. Right? So it's really a game of, as the fraudsters evolve, you evolve. So hubbing gives you that. It also gives you scale advantages, right? Because then you can have a very unified operation, which is done consistently across all markets. Automation, on the other hand, actually brings a very large focus on use of technology to reduce your false positives. I mean, just imagine if you're doing 100 million transactions, depending on the size of your operation, or a billion transactions on logins. And as people get more comfortable with mobile banking, that's exactly what's going to happen. You will check your bank account 3 times a week as compared to trying to walk into a branch 3 times a week. That's the reality. And so as you get this plethora of logins and transactions happening online, you're going to get a lot of alerts getting generated if you've not optimized on your fraud strategy. So false positives is going to be a very big thing to watch. And then not only everything in terms of an alert has the same level of risk. So you could have an alert which is very high risk, and therefore you are preventing that transaction. You just decline it, or you step it up, and you assign an analyst to help that customer through that journey. You could also have transactions which may be iffy, could be fraud, may not be fraud. Now, do you want to spend expensive human resources to do that? Or is that okay as a two-way notification which goes to the customer where he can self-serve with you? And if you've not got a reminder, let's say in 5 minutes, then depending on the risk levels, a response, then send him a reminder. And I think that's where the use of technology and automation comes in, where you can actually reduce the experience for the irritation value of some random person calling into the customer when he's in a meeting versus him being able to respond to an automated alert while he's in that meeting. And I think we must respect that the fact that our customers are also very busy. And particularly if a fraud is happening on their card or their banking account, they must not be doing that transaction, and they must be doing something which is even more important than addressing a call from the bank. So I think automation helps from that perspective. And then lastly, it's data analytics. It's something which you need to do every day. It's not something you do once a month or once in a year when the technology service provider of the fraud platform will come and tell you, we'll give you some consulting. No, this is a daily activity because fraud is happening every day. So every day you need to look at least what was the fraud which I couldn't detect yesterday, and then optimize your strategy so that you can detect it today. So every day you just need to get better. That's really, it's not very difficult. It's very simple stuff. But I don't think people do it to the rigor and intensity which it's needed. And people who will start winning the relationships with their clients. I think that's the important part to notice.
One of the things that we also wanted to talk about was this greater integration of fraud operations and other operations within the institution. And you had already hinted about this, especially as you look at the fine line between fraud and financial crime. But there's also cybersecurity. There's also the need to look at IT operations to make sure that they maintain services availability and reliability as well. So there's this integration that's also happening. So talk to us about how all of these are coming together to assure a good performance and good system stability, availability, and security, obviously.
One is to build and the other one is to run. But when you build, you can still be siloed, but you can bring in core members of teams to build, think through the wireframes, and then deliver together. When you run, pretty much all operations are still very siloed. And operations may continue to be very siloed, but there are elements which start needing to get integrated. So for example, the use of systems and tools to manage cybersecurity or fraud or financial crime. Could we look at exploring some synergies in those tools that you use? Because at the end of the day, cybersecurity is also solving the same problem of authentication. Who's accessing, right? Which is fraud. Similarly, there's a lot of play in the data and analytics that you could get rather than having distributed analytics across multiple operations functions. Is there synergies in there that you can get? And then as you may not totally combine the operations per se between fraud ops and let's say financial crime or CDD operations. But at least you provide opportunities for people within the teams to then go from one area to another. But they must be managed under very large umbrella of operations under one head. So the opportunities for people to learn and grow are constantly made available than if they were being managed distinctly. So there are plays, and people have to test and learn. I mean, I'm also testing and learning. I've tried it out. So there is no one magic bullet which is going to work. It's got to do a lot with the mindset. It's got to do with deep-rooted sense of organizational history. It's got to do with strategies, the tools, and it has to be fit for purpose for that organization. And I think that's the important piece that I'm trying to bring here. So definitely there are some synergies which are possible and people need to explore those. And yet we shouldn't race into saying that, oh, we can combine everything into one because that may not work. However, the information sharing across these siloed operations is definitely something which is going to become very important. So you could start off with a very informal huddle approach towards it. I'm seeing this, what are you seeing? How do we partner, co-create? As compared to trying to change the entire construct of an organization, which may take you years to do.
And then we need to talk about how ultimately this one will be measured, right? I mean, there's greater integration of tools, technologies, sharing of data and information, maybe sharing of business processes as well. But ultimately, we are working towards multiple set of goals. One of them is to reduce false positives. The other one is the ability to respond effectively and in almost real-time fashion. What are the KPIs for fraud management that you think really is quite representative of the challenge, but also the response of the best organizations in the world?
So even before we get to the KPIs, I mean, there's simple standard stuff, right? In terms of your false positive rates, your detection rates, I think those are the two important things. But I do know that most fraud risk managers always face the challenge of getting funded for the initiatives that they want to do to protect their customers. And that's different from, let's say, financial crime or cybersecurity. Cybersecurity and financial crime are existential threats. So blank checks get written out. Whereas fraud risk management is a financial loss. And so people are willing to absorb a financial loss. I do believe that in my endeavors, I have been fairly successful, because one of the things that I would pivot the conversations from is not about the fraud that has happened. That fraud happened despite the fact that the fraud risk management team was there. But it's really the value which the fraud risk management team brought in, i.e. in terms of how much fraud did they save. That's a metric which people need to measure and monitor. And when you do that and you combine it, it'll actually throw up a pretty big number as to the value which the team brings into place. So I think that's one metric which I would start watching, which is
potential fraud losses, obviously. Are there other? Yes.
Potential savings. Yeah. And one other metric which I think people need to start pivoting, because fraud traditionally has been looked at, let me minimize the level of fraud. I think we start needing to pivot from how much is my fraud loss versus how much does it cost me to mitigate that loss versus what's the impact to customers. And there's this whole customer angle which is not being measured at all today. And I think that's an important metric to look at, because, Michael, when a customer has been subjected to a fraud attack, for him, this may be the first time that he's thinking he's lost money. And it's very important to go through that sense of empathy with that customer. Because if you don't, then you're very clinical in your approach. But I've noticed that when we changed our scripts to dealing with customers who'd been, who had frauds on their cards, and we brought in the empathy into that script and the language which we spoke with our customers, we actually saw that when we sent them a replacement card, they used to activate it at least 100% higher level than what it was without the empathy. So in my language, I call it, this is an unhappy path for a customer. And if you can create value during an unhappy path for that customer, you actually can win a relationship back. And I think we need to start now thinking from a customer perspective, which is really how I manage risk, always trying to manage risk from a client's perspective. We don't manage fraud for the sake of the bank or the financial institution. We manage fraud to keep our customers safe. And yet in none of our metrics do we ever include anything about the customer there. So I think that's something which I do want the industry at large to start thinking about also.
This is obviously non-traditional risk management thinking as well. Obviously, recognizing the practicalities and the realities of our challenges, but also looking at empathy, which is, I think, quite impressive as well. One of the things that we've also learned in this conversation is that we need to have some collective discussions around all the risks that we are facing, all the fraud instances that we are facing as an industry. And I'd like to thank you, Sanjay, for spearheading that discussion today. Sanjay, parting words, parting thoughts, especially as you look at 2021, 2022, and beyond. What would the industry really look forward to, especially as we get better, hopefully, in terms of fraud management?
So thank you, Michael. It was a pleasure. So I would say that. I think as we look towards the future, there will be a lot of developments. I mean, there is obvious learning on the fraudster side, on the bank side. And I think in every problem sits a beautiful opportunity to completely transform the way we've done things in the past. Particularly in the digital play, all risk types are coming together. And it's that same use of data which you can make much sharper, sensible decisions and more unified decisions. So I do believe that there is a whole world which is waiting to be explored for us now in this domain than what people have even imagined. And if we do talk about open banking, for example, at a later date, and that's a world of its own. Nobody's even been able to describe as to what is possible in there. And then what's the risk which is going to come in there. So thank you, Michael. It was very insightful questions you asked me, and in some way I could share my own thinking with the industry. So thank you for the opportunity.
And I'm sure that our audience appreciated your comments, but this won't be the last time that we talk, Sanjay, because obviously as you look at exploration of this new world of banking, there'll be a lot of risk as well as fraud implications that we need to be talking about. Thank you very much for your time.
Hey, thank you.